The setup for Bitcoin is astounding. Technicals aside, I've never quite seen fundamentals like this for Bitcoin. Welcome back to the Bitcoin Layer. I'm Nick Bhatia. In today's episode, I will continue my ongoing evolving thesis about Bitcoin, which is that it is going much, much higher. Now, I've been researching Bitcoin since 2016, so bullish Bitcoin is not a new stance for me. In fact, I've for many years believed that Bitcoin could go to $2 to $4 million. That was my original approach to this asset class when I got started. I've mentioned the Tour de Meister video from 2012, 2013, in which he outlined Bitcoin relative to the rest of the financial system. And there was something that clicked in that early moment of learning about Bitcoin because I was already a gold bug in 2016. That evolved over the several months in which I was diving down the Bitcoin rabbit hole, and then I became a total fanatic by the end of 2016. With that being said, in 8 years, we've reached already a $2 trillion market cap for Bitcoin and a $100,000 price. So I stepped back and tried to understand how Bitcoin would be taking that final step from 6 figures to 7 figures. And when I did some thinking, I realized that my projections back in 2016 were incomplete. The projections were incomplete because it didn't factor in the path. You've heard the term path dependency here over the last couple weeks about Bitcoin and Bitcoin policy. Bitcoin has taken a path, and where it is today is not something I could have envisioned back then. And so because the fundamentals have changed, you have to adjust your thesis. My thesis about Bitcoin being this pristine form of collateral, prime real estate, it's not an original thesis. People had it before me. It's not wrong, but it's incomplete. And nothing quite captures what I was missing about Bitcoin, like the word strategy. Now, we're going to talk about the strategic Bitcoin reserve quite a bit later in the show, but strategy and Bitcoin as a strategic asset and a strategic tool is the new crux of the thesis. And strategy is why Bitcoin will go from $100,000 to $1 million. The Bitcoin Layer is sponsored by Unchained, the undisputed leader in Bitcoin financial services. Unchained empowers you to take full control of your Bitcoin with collaborative multi-sig vaults, in which you own 2 of 3 keys and you gain a Bitcoin security partner. You can purchase Bitcoin directly into your cold storage via Unchained's trading desk and eliminate all exchange risks. Unchained also offers the best IRA in the industry, where you can convert your existing 401ks or retirement accounts to Unchained, all while keeping control of your Bitcoin private keys. Don't pay more in taxes than you have to. Talk to Unchained today. Go to unchained.com/TBL for $100 off when you sign up. Don't risk your Bitcoin security. Do you have Bitcoin private keys stored on paper? Make sure you convert those keys to titanium with Stampseed. Stampseed has this really cool DIY kit that allows you to hammer in your seed phrase into these small titanium plates that are fire resistant and damage resistant. This kit is designed by titanium metal workers that have been working in stamping metal for over 14 years, and your words are deeply stamped, not just a shallow dot. So make sure you check out stampseed.com today and use code TBL for 15% off of your order. The interesting thing about this incomplete thesis is that all of the reasons I believed Bitcoin would grow and flourish as an asset in my lifetime are still well intact. However, there's this additional angle. So I discussed last week my big revelation. People should definitely go check out that video if they haven't. My revelation about Bitcoin last week was that the next leg of Bitcoin monetization will be new money created for the asset class. I'm going to get into that a little bit here as well coming up in this video. So new money creation is one aspect of my previous blind spot, but another is strategy. And it's not that when I was thinking about Bitcoin in the earlier years, it's not that I didn't think countries would add it as a strategic asset. It's that the strategic asset component of Bitcoin, it wasn't on my immediate radar. And that's just me being frank. What was on my immediate radar for Bitcoin was its attractiveness as an investment, as an asset that should be part of every portfolio, every balanced portfolio. So Bitcoin as an investment brought us here to $100,000 per Bitcoin and $2 trillion as an asset class. And that makes sense because if you look at the large tech stocks, they're all around this $1 to $3 trillion in market cap in size. So Bitcoin is the size of one of the Magnificent Seven, you could say, the large NASDAQ companies that are dominating the returns landscape outside of Bitcoin. But raw investment, especially from retail or just institutions, can't necessarily bring Bitcoin into the strategic category. Only governments can do that. And right now, what we are seeing in the United States of America is a strategic move toward Bitcoin, something that I just couldn't see coming 8 years ago, 4 years ago, but here we are. And I want to explain why it is the most bullish fundamental setup for Bitcoin of all time and what I expect from Bitcoin in the asset class here over the next couple years. All right, let's start with the Bitcoin price. Bitcoin is chopping around the $100,000 area. It first hit $100,000 or just shy. This was the $99,800 tick. This was on November 22nd. So for the last 3 weeks, essentially, you've had Bitcoin in this $100,000 range. Now, I dare call it a consolidation because it hasn't really done much consolidating here. It's kind of grinding higher, $101,000 as we speak here on Friday afternoon. The block height is 874,633 as of this recording. Now, Bitcoin, it's not explicitly consolidating here. It is grinding and I would say grinding higher as we are basically now at the highest weekly close on a Friday basis of Bitcoin's history. So Bitcoin, you don't even really call it consolidation. The reason that I'm doing that is because we are at just about flat for 3 weeks on the price. So from a technical perspective, I guess you could call it, but it is semantics here. There are a couple points on price. Number one, Bitcoin's dips once it hits $100,000 have been bought on about 3 occasions here. The first went down to about 90,000. Then you had another down to 92. You had a third down to about 94. Every single one was bought and bought back up to 100. That is impressive. That is impressive by itself. What I'm seeing here with Bitcoin reaching $100,000 and not really selling off for 3 weeks, but just kind of grinding flat or even marginally higher, it is an insanely technical bullish setup. I'm just going to say that. The video today is about the fundamentals, but on a technical basis, what Bitcoin is doing at $100,000 is it's a little mind-boggling because this is the type of behavior that Bitcoin price exhibits when it's in the middle of a big bull move and it's about to double again. So I've been calling for about 150 for the last few weeks. My original price target was 96. That was an immediate price target on the $73,000 breakout. We hit that really quickly, so that's basically what spurred on all this thinking. Where are we going next? And how much higher could we be going next? That's what I was doing. I was challenging my own thinking and thesis to try to come up with how much higher we're going. Well, I came out on the fundamental side at $1 million and higher. And that is because these, the new money thesis here and the strategic thesis built on top of the investment thesis, which is the digital gold thesis. That's the original investment thesis for Bitcoin for almost anybody that has a global macroeconomic leaning. Anybody that came in to Bitcoin from global macro see Bitcoin as the digital gold thesis because it's scarce. It can't be created by governments. It doesn't have to use a government or a bank for verification. These are things that Bitcoin only shares with gold. It doesn't share them with any other type of money. Therefore, Bitcoin digital gold. But Bitcoin as digital gold it's exposing itself as an incomplete thesis as we head into the next era. These next several years of Bitcoin and the United States. This is not the digital gold thesis anymore, guys. It's over. It's not that it's gone. It's relegated to the back seat. That's really what I've understood. Bitcoin as digital gold is riding in the back seat, and in the front seat is an accelerationist, futurist mindset, probably in the driver's seat, and riding shotgun, United States strategic Bitcoin reserve. Now, before we get into the specifics around the strategic Bitcoin reserve, and I have several thoughts there, let's answer a couple of your questions from last week's video where I gave my big revelation about new money creation and Bitcoin being monetized. The example I gave was real estate. Think of a family that's owned a large, several square mile plot of real estate. It has subdivided this plot and it wants to sell off the plot to developers. Those developers will finance the purchases of these subdivisions and it will then go borrow additional money to build. And so when the developer buys the land from the family had an asset on its balance sheet that had never been monetized. That's the key. If that family were to strike a balance sheet of its net worth, it would look at that plot of land. It would say this plot of land is worth $10 million. We also have $10 million in stocks and other securities and cash. Therefore, our asset side is $20 million and we have $5 million in debt against our $10 million of existing property or whatever. Therefore, our net equity position is $15 million. But the 10 million out of that 15 of equity is in land that has never been monetized. It means there has never been money associated with that asset. It's just dirt. And it's been dirt because it's been in that family for generations. So there's never been money associated with that plot of land until they sell it to a developer. The developer doesn't pay out of his pocket for that land. He borrows money from a bank. It's a brand new loan. It's brand new money. The bank has expanded its balance sheet. And that is the monetization process. When I say monetized, what monetized actually means is money being created. So when people say, I'm just looking at the definition because I wanted to look up the Oxford definition for you guys of monetized because it's that important. One of the definitions of monetize, which you might be familiar with, is let's monetize this asset or let's monetize this business. It means let's make money from it. So the first definition it says is earn revenue from an asset or a business. The second definition is convert into or express in the form of currency. And that is the definition I'm talking about here. The plot of land only is monetized when it's converted into currency. So that family has a $10 million asset, but it doesn't convert it into money until it sells the asset. And what I'm explaining to you guys is that when that asset is sold, the money is newly created. It's not existing money. That's how the real estate business works. Because real estate is excellent collateral for banks, they can seize it and sell it. They don't need you to come in and give all the money in cash or 50% or 60% or 40%. They really only require between 5 and 20% down. They will create the money for you because they will seize it. They will get a lien and they will seize it if you default, and they will sell it. Because another bank will lend it to another buyer because it's good collateral. That's what real estate is. It's collateral. Bitcoin is the best collateral to ever exist. It's definitely better than gold and definitely better than real estate. If you want the whole thesis, we have 2 fantastic episodes from Michael Saylor in which he goes after the 24 downside risks to equity, and he compares Bitcoin to real estate. Bitcoin is the best collateral to ever exist because it is digital and instantly verifiable and completely global. Think about how difficult it is to send and verify gold from United States to Asia, for example, and think about how easy it is for a bank to value a piece of property in a different country and consider that good collateral. You have rule of law, property law. You actually have all sorts of ridiculous considerations if we just want a good money to be collateral. And collateral meaning something that's good for final settlement. So one of your main questions to me, your follow-up questions, was, is it just going to be new money that's created for all these Bitcoin purchases? And it's only partly so, but a portion of the Bitcoin price appreciation will be directly related to new money creation. Let me explain to you how it'll work in 2 different circumstances. So, in the case of MicroStrategy bonds, for example. So, MicroStrategy is issuing convertible bonds. These bonds are being purchased by investment managers, and MicroStrategy is taking the proceeds and buying Bitcoin with it. Now, if I'm a bond fund, and I've worked at 2, so I know how this works. If I'm a bond fund and I want to buy a new issue bond, I go and I put my order in with the dealer. And I tell the dealer I want 100 million of this bond. And I'm going to allocate it as I see fit once I get the amount that I get. And usually what happens with these bonds is you put in your bid and then the dealer takes all the bids from the market and only allocates a portion of the orders because the company itself is not ready to issue the amount of debt completely in line with the entire total demand in the primary market. This is called oversubscription. So you have investors come, they oversubscribe to the deal, the company prints the deal, less bonds than were bid, but that way you basically prove that you have more demand for the next time if you're MicroStrategy. So the bond fund buys the new MicroStrategy bond. But in the bond world, in these securities, the settlement isn't for a few days. So that means I purchased 100 million of bonds. Let's just say I get filled on 70 million. So I'm about to purchase 70 million of MicroStrategy bonds, and I've agreed to do that. So when I'm doing my portfolio accounting, and by the way, these bonds are going to have a price basically starting at the end of the day today. They're going to have a price. So in my portfolio accounting, I own this new MicroStrategy bond. But from a portfolio accounting perspective, I haven't settled that bond. It means I have a cash liability in 3 days. Let's just assume it's 3 days from now when that bond is going to settle. So in 3 days, that's called T plus 3. In T plus 3, I have a $70 million wire that I have to send out. And let's say that it's Morgan Stanley that's running the bond deal, for example. So I have to wire $70 million to Morgan Stanley in 3 days, and then Morgan Stanley will settle those bonds into my DTC account, which is basically like the bond custody account. So 70 million going out, 70 million in bonds coming in 3 days. Now, I have two choices if I'm the bond manager. One, I can sell 70 million of other securities or see if I have cash lying around and use that cash or securities, sell those securities for cash and send the cash out in 3 days. Or I can ask Morgan Stanley, hey, will you repo this position for me? That means the bonds that you're going to send me in 3 days, instead of sending them to me, send them to me and I will send them right back to your custody. I'll give them to you as collateral. Then, instead of me wiring you 70 million, I'll only wire you 10, meaning you front me 60. So in actuality, you wire me 60 million and then I'll wire you the 70. So I only have to have $10 million. Morgan Stanley will come up with the 60. Why? Because I will pay interest on that 60 now. It's a loan. And why does Morgan Stanley do it? Because they have my MicroStrategy bonds in their custody now. It's their collateral. I've pledged it. That's what repo is. So if you want a repo 101, what's the repo market? I just gave you an example of what bond repo is. Treasury repo works in almost the same exact way. The functionality of it is the same. The numbers are different. So I just wired now Morgan Stanley $10 million. But what about MicroStrategy? They get 70. Those bonds that they sold to me, they get all 70. I send 10 and Morgan Stanley sends 60. Now let me ask you this. Where did that $60 million come from? Without having any knowledge of what Morgan Stanley is doing on a day-to-day basis, I can guarantee you that the balance sheet of the broker-dealer has expanded. Repo money is considered money in the system. Banks are, through their broker-dealer arms, are creating larger balance sheets when they take on repo agreements. And so when MicroStrategy issues convertible bonds and a bond fund buys that, some of those bonds are going to be pledged and financed in the repo market. And some of that repo financing is going to be brand new money from the broker-dealer. And that broker-dealer has a relationship with the parent bank. And none of that balance sheet has to really true up unless you're at the end of the month or really at the end of the quarter. So you have all this interim money being created for the purpose of making capital markets go. The reason that we're able to get trillions and trillions in new fixed income issuance every single year from treasuries, from corporates, from mortgage-backed securities, from asset-backed securities, and from the rest of the world is because broker-dealers are financing a lot of that purchase with new repo money, repo financing. This has nothing to do with commercial banks buying treasury bills when the government borrows and spends money into the economy, and the banks are the ones that actually monetize the debt by expanding their balance sheets when they buy new bills. This is an expansion of balance sheet at the broker-dealer level. It is what allows capital markets, specifically fixed income capital markets, to function. And so when I think about the future of Bitcoin and how Bitcoin will be monetized, because is new Bitcoin coming to market all the time? No. New Bitcoin is being mined at an extremely slow rate. What do we see with the sum of the Sailor buys and the ETF buys? They far outstrip the minimal Bitcoin that comes to market every day. I believe it's 450. I'm going to get my calculator out. 3 1/8 Bitcoin times 144 blocks is 450 Bitcoin. Okay? 450 Bitcoin a day is getting purchased faster than the miners can even produce it. That means that Bitcoin that is being purchased is being monetized from old holders. Those old holders, let's imagine somebody that mined Bitcoin in 2010. They didn't forget about spending the money. This is Bitcoin that was created from a laptop. So you can compare it to that piece of dirt that's been in the family for 100 years. It's never seen money. It's just an asset. It's just dirt. Or in Bitcoin's case, it's just ones and zeros. It's never been money. But when it's purchased by MicroStrategy, the holder that had it from 2010 and never monetized it, that Bitcoin is now sold, and it is partially new money and partially existing money. But the key point of my thesis is that it's partially new money that was created to buy that Bitcoin. Brand new money. So Bitcoin is being monetized by credit creation. Repo financing is credit creation. Capital markets issuing fixed income that are then financed by bank. And by the way, banks come to market and buy bonds. They buy corporate bonds. And how do they do a lot of that financing? They just expand their balance sheet. If I'm Citi and I'm running a bond deal and I have a corporate client, let's call it Apple, just for simplicity's sake, and Apple issues a bond, Apple issues a $5 billion bond. And Citi says, I will write 500 million of it. So you only have to find 4.5 billion in the market. So Citi calls all the bond funds. They get 20 billion in orders. No joke. I mean, it's way oversubscribed because they don't even have to come up with the money. They just call the next guy and say, "Will you finance my new Apple bond?" Sure. What's the cost to carry? Well, I'll get 5% yield, and will you finance for me at 4.5? Done. And you have a positive carry on your Apple bond. No credit risk because Apple's never going to default. You have interest rate risk. You hedge it out in the swap market. No, you have a no risk corporate bond position. This is the way that everyone does it. And I've seen it. I've sat in the seat. I've traded treasuries. The corporate guys are calling out everything that they're doing. They're hedging everything out. They're basically, in their own eyes, taking no risk and just swallowing bonds, bond after bond. And the universe just continues to grow year after year. Back to Citi. Citi says, I'll write 500. What does that even mean? It means when Apple settles the bond and now has 5 billion new debt, they also have 5 billion in cash. It's all sitting at their Citi bank account, and 500 million of it came from Citi just typing it in. 4.5 billion was wired in from other banks, and some of it was financed with new money from the Citi broker-dealer. Some of it was in repo. Some of it was financed from other repo financiers that are now taking Apple bonds onto their collateral. So I apologize if I've lost you with this repo rant, but it is the only way to understand the full extent of my new money thesis for Bitcoin monetization going forward. The bottom line is that Bitcoin is now tapped into this bond fund world. So the generation of new capital to buy Bitcoin is unlimited. By the way, I just thought of this. The capital to buy back shares from these large S&P 500 companies is unlimited because they can always go tap the bond market and buy shares back. Now, you're going to have companies that are not tapping the bond market to buy shares, just tapping it to buy Bitcoin. And you already have it. MicroStrategy now joining the NASDAQ 100, guys. It is accelerating. Remember, you got the accelerationists sitting in the driver's seat, and you have the strategy sitting shotgun. And by the way, it's not just the United States Strategic Bitcoin Reserve because it doesn't even exist yet. It's just a thought. You basically have Saylor sitting shotgun, showing everybody the way. This is the future for Bitcoin. This is the next year, what we're looking at. It's so bullish, my brain hurts. One more quick thing on the new money creation. One of you guys asked, what if I buy MicroStrategy stock on margin? Is that new money? Well, your broker dealer that is lending you money to buy MicroStrategy is likely an expansion of the balance sheet of at least one financial institution. So what I'll say is whether it's the broker dealer extending you the credit or the broker dealer basically grows their balance sheet and transfers the loan to a parent, basically borrows money from a parent bank to provide that financing, it's likely that some or all of that new margin financing for your stock purchase is new money creation. There's no way for me to know how much each margin broker or each repo dealer is expanding their balance sheet. What you guys need to know is that some of it is balance sheet expansion. And so if some of it is, that is the thesis, that Bitcoin is monetized going forward by new money, not by existing money. Existing money, that was how we got here. But the next level is new money creation. Okay, let's go to the Strategic Bitcoin Reserve. So we had the honor of Senator Cynthia Lummis joining us at the Bitcoin Layer to outline her bill earlier this year on the Strategic Bitcoin Reserve. Joe Consorti and I co-hosted that interview, and Senator Lummis outlined what she believes is a strategic path for the United States to get involved in Bitcoin. It involves a new custody situation, a Fort Knox type of situation for the United States and Bitcoin. It also potentially comes with the acquisition of new Bitcoin for the purpose of having a strategic stockpile of this new asset. Now, we were in support of this idea of having the United States get involved in Bitcoin, but it didn't become a political reality until very recently. Then, when we saw what was happening on the campaign trail, it became obvious that the Strategic Bitcoin Reserve is no longer just an idea, but potential policy. Now, I will introduce my own bias here for a quick second, which is that I believe the United States has a lot of problems. I also believe that Donald Trump won the presidency on his promise to solve a lot of those problems. I personally don't believe that the United States not having a strategic Bitcoin reserve is in the top 5 or 10 problems for the United States. I just don't see it like that. So when I'm thinking about the president coming in and responding to the electorate and putting in policies that he was voted in for, the strategic Bitcoin reserve was not in my expectation of being in the top list of things to do. But as we go further into the president-elect season, I can tell that it's not the case, that Bitcoin is in the top 10 things for the president on the president's agenda. And that actually means the strategic Bitcoin reserve is closer than I could have ever imagined. Now, here is a picture from today, and this picture is worth 1,000 words. This is our friend, Senator Cynthia Lummis, shaking hands with the incoming Treasury Secretary, Scott Bessent. Now, Lummis has come out today and said that she believes we are close to a strategic Bitcoin reserve based off of this conversation. They're all smiles in the picture. It is a reality now that the United States is potentially going to make a strategic play for Bitcoin. Now, let's go back to our original conversation this summer with Senator Lummis. One of her main points, which I didn't fully give credit enough to, was that the idea behind a strategic Bitcoin reserve is in part to address the national debt. Now, I can see why the United States would want a strategic stockpile of Bitcoin for potentially geopolitical situations, but paying back its own debt with Bitcoin that has appreciated over the long term was not something that made a lot of political sense to me at the time. Now what I'm seeing is that it's not about buying Bitcoin low, selling high, and paying back bondholders. It's actually about making the United States the center of this technological revolution. So when Bitcoin is being stockpiled by the United States government, the United States government is doing so because it believes that Bitcoin needs to be held within the borders of the US so that it's not acquired by others, so that others don't have a strategic advantage versus the United States from an economic and technological perspective. And with Bitcoin's price going where it has, the economic ramifications of not having Bitcoin are becoming strategic blunder. And that is why strategy is in the front seat right now of Bitcoin, is because it is a strategic FOMO. It is a global FOMO wave on not having enough of the future money of the world. And now we get back to digital gold. We can say, well, Bitcoin is digital gold, so it's the future money because we had gold for a couple thousand years as the globally accepted money. Now we have gold obsoleted by the fiat system, so the future is going to be a digital gold, and we'll go back to a gold-based system, but it will be in Bitcoin. That thesis has always been there, but now all of a sudden, the biggest government in the world is realizing this might be the case. Its leaders are starting to advocate for this type of role of the US with regard to Bitcoin. And then, surprise, surprise, the rest of the world is looking at the US and saying, uh-oh, we need to follow them. And now I'll get into the pendulum shift that we are seeing. The president-elect was on the New York Stock Exchange floor this week, rang the opening bell. The ovation he got and chants of USA rang out on the trading floor. And you have basically and then you had Bezos and Zuckerberg both donate to the inauguration fund this week as well. The pendulum has shifted back. When I tweeted about the New York Stock Exchange, Mark Moss was the first person to say the pendulum has shifted back, and it has. Mark is absolutely right. The energy around Make America Great Again policies is unlike anything that has existed since Trump got onto the campaign trail in 2016, 8 years ago. The wave of support for America First industrial policy, America First tax policy, tech policy. It's unlike anything that's ever existed. Part of that pendulum shift is Bitcoiners being in the room with Trump and his closest advisors at all times. And this is something that I was thinking about before Trump won. Why has he become even more popular than he ever has been before? It's because the people in his ear are named Eric, Don Jr., and Barron. And I'm being genuine about that. The people that are helping steer this America technology policy are the sons of Donald Trump himself. And so when we think about Trump being in the Middle East, Eric Trump being in the Middle East at the Bitcoin conference, Donald Trump himself, Donald J. Trump, being in Nashville earlier this year, the signs were clear that this is a Bitcoiner administration. It's not that Bitcoiners have come in and bought the election. You have to understand that that is propaganda so far from the truth. What has really happened is that Americans who are Bitcoiners have had enough of current policy and are looking at other Americans supporting Donald Trump and the Trump policies, Make America First Again policies, and saying, hey, we have something exactly in common. It's the First Amendment. It's the Fourth Amendment. It's the Ninth and 10th Amendment. We have all these things in common. It's time to put these policies in place. And by the way, Bitcoin as a First Amendment technology and a Fourth Amendment technology, and also a response to fiscal profligacy that Senator Lummis talks about in her bill, $36 trillion in debt. What are the solutions? Well, we have to grow the economy in the United States. And Bitcoin, as a global leader right now in the global economy, in technology evolution, Bitcoin is a global leader. So Bitcoin needs to be at the middle of policy. So this is a Bitcoin presidency. This has never existed before. And it's important that it's happening in the United States because the rest of the world will look at the US, probably not Europe. That's a story for another day. The rest of the world will look at the United States and say, Bitcoin is officially part of the future of money. It is even likely the future reserve currency. And so when we talk about Bitcoin being an investment and digital gold being obsolete thesis, this is what I'm talking about. Bitcoin being digital gold is not motivating the United States to start a strategic Bitcoin reserve. It is not. It's the technology. It is the geopolitics. It is the need to grow out of the debt. The United States has made a lot of mistakes fiscally over the last few decades. Those have to be addressed. The solutions are just an enormous amount of inflation or genuine growth. And so the United States is choosing growth. It's choosing technology. Zuck and Bezos joining Elon as influences on the administration. I can't imagine where we've come from to where we are today for Bitcoin as a strategic asset. Thanks for joining us today at the Bitcoin Layer. Make sure to subscribe to our free research publication at thebitcoinlayer.com/subscribe. Definitely subscribe to the channel here, rate and review on your favorite audio platform, and we will catch you guys next time.